Welcome to this explainer. Today, we're going to trace the absolutely fascinating history of money to really wrap our heads around today's financial system. Whether you're a trader in Lagos, an entrepreneur building a business in Nairobi, or a crypto enthusiast in Abuja, grasping this evolution is absolutely crucial to making sense of the global economy. Okay, let's dive right in with a pretty profound question. I want you to pull out a Naira, Cedi, or dollar note. Or, just picture one in your mind's eye. Take a really good look at it. Why on earth can this fragile little piece of paper buy you food, shelter, or a plane ticket? Well, the real answer isn't the paper itself. It's trust. The government recognizes it, businesses accept it, and we all rely on it. That collective confidence is literally everything. And tracking exactly how humanity's trust has shifted over the centuries, that is the absolute key to understanding modern finance. So let's look at part one. Before paper, why gold? To see where our modern trust in money actually comes from, we gotta go back. Way before paper money or digital wallets, human societies relied on direct trade, barter. But as economies grew, that system hit a massive roadblock called the double coincidence of wants. Think about it. A fisherman wants maize, but the farmer he meets only wants a boat. No trade happens unless they awkwardly hunt down a very patient third person to complete the triangle. Society desperately needed a universal medium of exchange. Out of early experiments with stuff like salts, cowrie shells, and cattle, gold emerged as the ultimate technological upgrade for global trade. Why? Because it flawlessly hit all 5 of these marks. You couldn't fake it, it didn't rot or rust, you could divide it up, it packed massive value into a small space, and a merchant traveling from Africa to Europe could spend it with zero explanation. It just worked. Which brings us to part 2, inside the gold standard. As global trade exploded, lugging heavy metals across continents got dangerous and, frankly, wildly inefficient. This sparked the ingenious birth of the gold standard. Think about how a warehouse works. You drop off the bag of rice, you get a receipt. That receipt proves you own the rice. Paper money originally started the exact same way. It was just a convenient, lightweight receipt proving you owned a specific chunk of physical gold sitting safely in a bank vault. The paper itself wasn't the wealth, it was simply a claim on the wealth. And this brilliantly illustrates the discipline of the gold standard. Imagine a water tank supplying a town. The paper money is the water flowing through the pipes, and the gold reserve is the tank itself. Under this system, governments couldn't just pump more water or print more money without adding more physical gold to the tank. This natural restriction kept long-term prices incredibly stable. All right, part 3, why we abandoned gold. So if the gold standard was so stable, why aren't we still using it today? Well, its biggest weakness was confidence. Since paper notes were promises of physical gold, if the public lost trust, they demanded their physical gold all at once. This is a bank run, and it revealed a terrifying vulnerability where even healthy banks could collapse overnight because, spoiler alert, they didn't actually keep everyone's gold on hand at the exact same moment. Let's look at the timeline here to see how this unfolded. Starting in 1914, to finance the massive costs of World War I, governments actually had to suspend gold convertibility just so they could print money. Then, during the brutal economic collapse of the 1929 Great Depression, the strict rules of the gold standard severely blocked governments from stimulating their economies. After trying a modified system in 1944, the final blow finally hit in 1971, when U.S. President Richard Nixon formally ended the dollar's convertibility into gold. The world needed flexibility, and gold was just too rigid. Moving on to part 4, the age of fiat money. That monumental decision in 1971 brought us right to the dawn of the monetary era we're all living in today. The crucial point here is the trade-off. Fiat money, which, by the way, comes from a Latin word meaning let it be done, has value simply because the government says it does. This gives central banks the vital flexibility to print money and fight crises, but it also unleashes a constant gnawing anxiety, the threat of inflation. Because modern money is backed entirely by government authority rather than physical scarcity, there's a serious risk. Print too much and poor policies can easily erode your purchasing power, making everything from food to housing way more expensive. And honestly, this is exactly why central banks and cautious investors around the world still hoard physical gold today. It's basically an insurance policy against the risks of fiat. Finally, part 5, Bitcoin and the future. As the digital age accelerates, we're looking way beyond physical metal. A completely new chapter of money is being written right now to tackle that exact inflation dilemma using the power of the internet. Enter cryptocurrency. In 2009, a decentralized network introduced Bitcoin, aiming to solve the fiat problem of unlimited money printing by doing something totally revolutionary, mathematically capping its total supply at exactly 21 million coins. No central bank or government can ever print more. When we stack them side by side, we're really looking at two distinct attempts to create scarce value outside of government control. One relies on the physical laws of nature and thousands of years of human history. The other, digital code, modern cryptography, and a decentralized blockchain network. While gold is historically stable, Bitcoin brings massive volatility. But at their core, both are driven by the absolute need for scarcity. So, what's next for us? Well, we're likely heading into a fascinating hybrid future. Physical cash is declining rapidly. Instead, government-issued central bank digital currencies, traditional fiat systems, and decentralized assets like Bitcoin will probably all coexist and interact right inside your digital wallet. At the end of the day, whether we're trading cowrie shells, gold coins, paper receipts, or lines of digital code, trust is the true foundation of all value. As technology continues to aggressively rewrite the rules of global finance, the absolute most important question for your financial future is this: where will you choose to place your confidence tomorrow?